Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. All right, good morning, everybody. My desk is completely screwed up because I left the boys playing in here the other day and they decided to move all of my monitors. So let's go through the charts here really quick. If I can even see the charts, oh my gosh. They're not being left unattended in here again. All right, so Treasuries. Well, so yesterday Friday was quite the session in the Treasuries. We busted through here, and honestly, I never saw any really good explanation for why we jumped up, and then they clawed it back the whole session and pushed lower. Here in the overnight session, you're seeing again a little bit of, starting out on downside action. So what's going on here? I still expect the economic data to look pretty bad, and that could push the Fed towards doing another rate cut. But what we're hearing from a lot of the Fed members is no cut in December. So that is the chance of a cut in December is now below 50%. S&P 500 here. They took it on the nose on on Thursday, but then kind of had a miraculous buy the dip session on the Friday. Here, starting out in the overnight, they are on the down foot. Some of this buying could just be due to things like short covering into the weekend and those sorts of things. So the market is going to be paying attention, especially here on Monday, but throughout the week, to see if the risk sentiment improves or not. I think this is a pretty critical juncture for the S&P 500. Oil, nothing too eventful over the weekend. Gold and silver did take the hit before the weekend. Copper, okay. Japanese yen is still looking kind of So if the treasuries push a little bit lower and you see the Japanese yen push lower, I think that could get really ugly. So gonna have to keep an eye on that one. And then Bitcoin being savaged over the weekend, pushing now lower. And we are to where we have to come and look at like a daily chart to see what's going on in Bitcoin. We're well below the moving averages now, by the way. I mean, look at that. They came up and they bounced off of it. So there might not be, any really technical levels that people are going to be really paying attention to until we get to like 80K, 75K. And then you're to where strategy has their base position. And they have not been doing very well either. They used to be trading at a premium to Bitcoin because supposedly it's all leveraged and everything. But that premium is quickly being destroyed. So the cryptocurrency people are in pain right now. All right, so that's where we're at there. For the week, let's see here. Does Forex Factory have our schedule? Because I do believe that we are supposed to be getting the new data here. Okay, why am I not getting Forex Factory? Zero Hedge loads up. It's just Forex Factory. Well, the top story on Zero Hedge is in surprise reversal. Trump now supports GOP release of Epstein files. So I take it that he called BB and BB is like, okay, fine. That's my guess. but who knows? Who really knows? Bitcoin's oversold. Okay, so Zero Hedge is doing their best to try and pump up Bitcoin. I gotcha. But I wanted to see Forex Factory. Okay, wait, timeout. What's Cloudflare? Oh, Forex Factory is just down. The Cloudflare is working. Well, oh well. Well, for financial juice, let's see here. We had New York Fed manufacturing. Really? On the 17th. That's looks correct. We got a ton of Fed speakers today. And all after like the top of the hour. So I think we can rest easy for the time being. Probably they're not going to do too much. Maybe some of this selling is people making a bet that the commentary will be hawkish, but I'm not so sure. Williams and Jefferson. I think Jefferson is one of those kind of does whatever the Democrats want sort of guy, right? But Williams is a little bit of a wild card. I think last time we heard him speak, he was more on the hawkish side. So, yeah, that'll be interesting. All right, let me fix my monitors here. Wow, something still seems kind of off about it to me, but there we go. Make sure the volume on the mic is good. Doesn't pick up the fan. Man, they really There we go. All right. So what we got? Oh, Octavia's pointing out that it is options expiration this week. That is a good observation. So I do wonder, like, because what was the number? Zero Hedge had a number. I don't see it anymore. Oh, there we go. 76.25. 76.25 on the S&P 500, which is where S&P 500 flips the negative trend and CTAs start more aggressively shorting the S&P 500. So I wonder what happens with the options. I guess we should come over and we should look at our gamma exposure, huh? Current flip point is 67.67. Oh, so we're in negative gamma. It is not loading for me. What's with that? Come on, bar charts. Well, it's not showing me, but I think we can probably assume that we're at least in negative gamma territory. Treasuries are back up to 4.8% too, so the volatility in the treasuries did increase. Having trouble getting comfortable today. Ooh, I got the fan right on me though, and that feels good. Oh, you know what's wrong here? Is I never started the music. That's what's wrong. There we go. Somebody sent me a message about like a platform here called tradingdojo.co. And it's supposed to be a backtesting platform, but like it uses TradingView, and I'm like, well, TradingView has built-in backtesting, so what exactly are you doing? So we got until the top of the hour, then we're going to start getting some Federal Reserve speeches and so forth. Let's make sure that I've got the Financial Juice connected. And we got Twitter going correctly here. Jeffrey Gunlock warns of garbage lending as private credit booms via Bloomberg. Oh, and the speakers need to be turned off there. Is Forex Factory down? I think it is, because I couldn't get to it either. Should try again? No, it's still down. We should just set up a ping, and that way we'll know immediately. No, we don't need it that badly. I wanted to see, because I don't know if the the federal data compiler peoples have published a new schedule yet or not. I hadn't seen any news on that, but supposedly we're getting some jobs and inflation data this week, and I want to know when. Oh boy. Okay, 1 minute ago, Amazon seeks to raise $12 billion from U.S. bond offering. I wonder if that is what was the selling and not the other things that we were thinking about. Because a bond offering is something that tends to push the treasuries down. It's the other news one. I think investing.com has a pretty good one. I use Financial Juice for like what's coming up today. Financial Juice. There's a bunch of spam I missed over the weekend, too. I wonder if I were to make a spam channel. So like, instead of just banning them from the server, I would change their role to spam and put them in a channel that only the spammers can see. If that would change anything or not. Well, I don't think that would work very well, because on Discord, when I ban them, that is also the easiest way to delete all their messages. I'm getting a little bit of activity here that kind of seems bullish to me, but I am very suspicious of it. Okay, so I didn't notice here on this link that I had posted in the Discord, in the free Discord. Amazon seeks to raise about $12 billion from U.S. bond offering. Someone is pointing out that this is the first sale of Amazon bonds in nearly 3 years, and it is not officially confirmed. So that actually makes it even more interesting, because does this mean that Amazon is under pressure? What are you talking about here? Tangential YouTube channels require a lot of editing skills regardless. I mean, you don't necessarily have to be an amazing editor to have a decent YouTube channel. Yeah, having an editor that can come in and make images and all that sort of stuff is totally helps. But you can find editors in like Pakistan and India that are willing to do it for reasonable prices. You're able to find editors that are looking for a YouTube channel to be a part of and like partner with you. So you can find them. But it's also like, it depends on the channel, right? Like on our channel, when I was doing the videos with an editor, you know, at the tail end of 2024, it didn't really change a whole lot. Like, because people watch my videos for the content. And so the primary factor in the success of the YouTube channel is how good of a message I'm sharing and how good the thumbnail is. I think maybe part of my problems are thumbnails, but got some ideas. Some videos. I wanted to do some video writing on Saturday, and then it didn't happen. I would like to make a video. I thought that we had made this video, but like I was looking through it and I was like, we don't really have one like this. That is basically like the secret to day trading. The secret to day trading is that what you know about the market matters more than what you are seeing on your chart. In fact, you don't even really need the chart. I don't agree with the people that are like, oh, just look at the order flow and then trade off of the order flow. Well, order flow is useful, but it's not all you need. You need to know what's going on. So should we call, am I a fundamentalist? I suppose you could present it that way. But the issue that I have with it being a fundamentalist is that, like, what is actually fundamental data and technical data doesn't really match up with what's going to be useful to you. Because knowing things like which direction the CTAs are going to be going, like being able to anticipate volume from CTAs, that's, for instance, a key thing, right? But like in every one of these cases of things that I know of that can kind of help you predict future orders, none of them are something that you will see on a 1 minute chart. You know, so I don't really like to use the idea of fundamentals per se, but rather it's just the idea that the market is more statistically efficient than it is informationally efficient is really like the academic way of putting it, which means that if there is a pattern on a 1 minute chart, people see it, they trade it, it takes it out of the market very, very quickly. Whereas if there's a piece of information like whether the Federal Reserve is likely to cut interest rates in December or not, the market is actually not that good at pricing that in, which is why the bond market seems to get wrong the direction of interest rates at every key juncture. Right? So anything that we can know about what's going on in the market, what is the conditions of the economy, what are the positions of existing players, and there's all sorts of pieces of information that will help you predict those future orders. But just don't do technical analysis. Don't do quantitative analysis. Don't do technical analysis. And it's not even like okay, CTAs will go short once the S&P 500 goes below a certain level. And the technical analysis way of looking at it would be, well, we have this pattern and they go short here, and so that should bring us down to here based on like a measured move or the length of this move or something like that, right? And what we want to do is we want to say how many orders are going to come. So to figure that out, we have to figure out how much money the CTA community is actually managing. And once you know that and their key triggers, then you can kind of predict how far that might actually move the market. Right? And that's how you approach it. So it's completely different from any of the technical analysis stuff. How do you know that? Well, there are a lot of banks that have data that allows them to estimate these things. And they publish some of that data, which you can often find on Zero Hedge. Well, TA News trading our scams. Yeah, on Zero Hedge. Well, so like their top story right now on Zero Hedge is a story like that. Like here, let me show you an example. So this is actually coming from Goldman. Okay. By the way, there's NVIDIA earnings this week. I don't know what day, but there is NVIDIA earnings. Forgot about that. Systematics. The S&P has now broken the short-term threshold twice in as many weeks, only to be saved by the 4 o'clock bell. The short-term threshold in NDX and RTY were both broken this week, and Goldman's work suggests CTAs are set to sell 20% of their NDX and RTY holdings in the next week, assuming a flat tape. Keep SPX 6725 on your launchpad at this level. S&P flips negative trend for the first time since one session in October, and really the second time since February. And does it tell me the amount? Oh, here we go. The next key level to watch is CTA medium-term momentum threshold of 6442. Below this level, the market will have to absorb more than 32 billion of supply in a 1 week period. So see, they're telling you how much they expect to see selling. Because see, what happens is, they have all of these clients and they can analyze their clients' orders. Right? So like when we're talking about order flow, right, we can look at the market, we can look at the regular volume, which technical analysis tends to do. We can look at the limit orders, which is once you have the limit orders, that's when we call it volume or order flow. But that doesn't tell you who submitted which orders and why and those sorts of things. But the banks, they have information on that because they know who's submitting every order at the very least and what kind of a business that is and things like that. So that's how they do that analysis. They can come in and say, well, the CTA space has certain amount of money under management right now, and ergo if they go short, this is how much money and selling they're going to have to sell. All right. Banks are the biggest sucker. Okay. Explain to me why you think that the banks are big suckers. So I don't think that means that we're going to sell today. No. I think that today is very much up in the air. No, that's not what they said. My man, you are not Brother, if what I just read to you says that I should sell it right now, then I don't think you're paying attention, and maybe trading is not for you. Like, I think I have my own kind of suspicion that today will be a sell. But that information that we have about CTAs does not say sell yet. You need to test something. Well, no, they have to get below. So it didn't say, in that report at least, it didn't say the amount that was the near term. But the near term was 67.25. So I have found with that near-term target that they will play around with it a bit. So I wouldn't just be like, it breaks 67.25 and we're done, so. But if we close below 67.25, then it would trigger. If we close below 67.25, then that means a certain amount of selling will come to the market, right? And then the other one that they had was like 67.40 something, right? Now, in those cases, that's not just you should sell the S&P 500. I mean, it probably means that you sell the S&P 500, but it is saying a certain amount of money will be triggered to sell, right? They said, like, what was it? 35 billion? will be triggered to sell if we close below 67.40 something. But there might be other things out there that are buying, right? You options, like government kind of stuff, domestic policy kind of stuff that could trigger certain amounts of buying. And so you kind of have to look at all of the different factors that you know about and make estimates about how much volume that's going to, or how many orders are going to come into your market based off of that. And then once you know that, and you can add them all together and see if there's a clear imbalance. And if there's a clear imbalance, then you have a trade. For today, we don't have that. In fact, today, I think that their markets are going to be relatively quiet until or unless we get a comment from Federal Reserve Speaker. So, especially for us in the Treasuries, we just wait for, what is his name? For Williams or Jefferson to say something. So the predictive accuracy. Well, so no, so okay, so let's go back to the beginning, shall we? The market is more statistically efficient than it is informationally efficient. what does that actually mean? So what we've learned from order flow, if you really study the order flow empirically, things like this book, Trades, Quotes, and Prices, Financial Markets Under the Microscope. You know, you're going to come to any end of every chapter. Tons of references. Pretty much every page has insane amounts of algebra on it. Okay, so this is like peer-reviewed empirical research at universities. And what they find is that orders have a very strong impact on the market. In fact, if you look at a study that was released, it's been like 2 or 3 years now, called the Inelastic Markets Hypothesis. They go and they show empirically that if you take $1 out of bonds and put it into the stock market, you'd think that it would increase the market cap of the stock market by $1, but it actually increases it by $5 to $8. So orders have very, very strong impact, right? So what that means is if you're looking at a chart and you think that if the S&P 500 crosses above the moving average, that's going to be, cause a trigger long cross of the moving average, right? Well, if everybody thinks that that's going to happen, it's going to go up and it's going to get there before you can do anything, right? So then you're going to try and get in before it touches that, right? Like in that situation, if everybody knows that the cross of the moving average is a signal long, then as soon as they touch that moving average, you're going to see a flood of volume that's going to push us up, right? So then you would be like, I should get in before that. If I think that we're going to move up to that moving average, I want to get in before the moving average and then get out right at the moving average, right? When everybody else is getting in. But then other people are going to see that and they're going to do it, right? And so the market's going to move up faster. And then it might move too much and come back. And the net result of all of that is it just becomes noise. The signal gets destroyed by the orders, essentially. And so that's why on a short-term basis, markets are very statistically efficient. You can't go in and analyze the history. They're martingales. There's nothing in the history that effectively predicts the future price history. But the issue is on the informational side, again, every order counts. So if you come in and you say, well, the S&P 500 should be worth 6,800 based on my analysis of earnings and all of these other sorts of things, you're going to find that the S&P 500 is almost never at that level. And why is that? Well, you might think that this is what the fundamentals are, but there's another guy out there that just runs an index fund, and he just has to buy and rebalance his portfolio every week. And how much he buys is entirely dependent on how much money people contributed to his fund that month and how much money they took out of his fund that month. So, maybe a lot of people contributed that month. There's not a lot of retirees. So he has to buy. And when he buys, it's going to move. Those orders are going to move things. It's going to move price, even though there is no informational content about the economy behind those trades. So that's why we are informationally efficient, but not we're statistically efficient, but not informationally efficient. Right? So now, once you kind of put it in that perspective, both the traditional technical analysis and fundamental analysis approaches to the market have major flaws, don't they? Because on the technical analysis side, well, those kind of signals get removed very, very easily. But if you can find one, they tend to be really reliable. And so that's where there are some inefficiencies that still exist and are actually created by the market themselves. So they will always exist. And it just has to be only a certain people can take advantage of it, right? Like you have to be really, really fast to take advantage of that inefficiency, right? Versus the fundamental guys, well, if you go and you do this analysis and it's supposed to be here, it will never be at that price. And you say, well, it's overbought, so it has to come back down. But there's actually no guarantee that it does have to go down. If the flows continue to be long, that people continue to buy, then the price will continue to go up. And that's why you've seen over the past long while that a lot of fundamental based funds have not done very well. Because what actually matters is the orders. And so you have to have information that will predict future orders. So I might know the S&P 500 is overbought and really vulnerable to a decline of some sort. But in order to trade off of that, I have to know something that I know is going to immediately trigger orders. Right? It's not possible to access that. Well, that's not true at all. So let me give you an example. When were we? Well, we need to come back and show you a really longer term chart because it's been a few years now. It's been a few years now. Okay, so going way back over here to like the beginning of 2022-ish, right? Especially the end of 2021, beginning of 2022. And the Federal Reserve was saying, well, probably we need to increase rates, but we don't think it'll be too much. And meanwhile, inflation was running wild. And so there were a lot of people that said, well, the Federal Reserve can't increase interest rates because that would cause too much trouble with the national deficit, for instance, right? And so you had all of these people in September, August or so of 2021, and even going into like December of 2021, and saying, oh, well, the Federal Reserve can't increase interest rates. Meanwhile, every piece of economic data that we had was suggesting that inflation was a big problem and that the Federal Reserve was going to have to increase rates rapidly in order to deal with it. So there was information out there that essentially was telling you that there was going to be future sell orders in the treasuries, that interest rates were going to go up. But because of other short-term factors, things that were happening that were pushing the treasuries up, the market ignored those. So there's information out there. That's what it means by that the market is not informationally efficient. See, because you're running with this assumption, the kind of the classical teaching of this, the market is efficient. The market is efficient. Well, it's not, but it's in the nature of that inefficiency that is what really matters. And so if the market was efficient, then all of that information that would be available to you should already be priced into it, right? But because the market is not informationally efficient, that it reacts to all orders, and those orders can take price very, very far away from where fundamental value should be. And there can even be information that directly suggests that future orders are going to come and they're going to be in a certain direction. So another really good example is when Elon Musk said that he was going to sell 10% of his holdings. And when that happened, there was a decline in Tesla, like when he said it. But then there was still a decline when he actually sold. And why is that? Because his selling his orders actually have an impact. Well, he would have gotten a better price if he hadn't said anything, but his orders hitting the market had an actual impact. And even though everybody knew there was plenty of people that were like, I don't know what's going on here. They didn't know what to do with it. So you could have easily come in and just said, well, he said he's going to sell 10%. Here's his holdings. Here's how much that's going to move the market. And you could have gone short and front run that. Right? So there's all sorts of information that is available to you that can predict future orders. The issue is just has to be something that you really think is going to be like immediate orders, right? Because the issue with the informational inefficiency is that if you identify one, the whole thing is that there's no guarantee that the market is going to go the way that you want it to, right? That's the whole issue, is that you can find informational inefficiencies, but there's no guarantee that the market is going to play along with you to help you take advantage and make money from those informational inefficiencies. And that's why trading is so hard on both sides, right? You do the technical side, it's hard to find anything. You go the fundamental side, well, there's no guarantee that it's going to go the way that you want. Give me a timestamp. September 2021. You can go back and you can start watching. Or you can watch because I've been doing this, since basically every day since 2017, you can go back and watch my trading every day. I hardly ever miss, by the way. I only miss like literally a handful of days that I've missed. That weren't like planned vacation or something like that. Like maybe once or twice where I was sick and I didn't show. And that was like because I literally couldn't speak. Right? But you go back during that time period, and I was complaining about it literally every day. I said we should be selling. And then, when it happened, we took our victory lap. It matters very much. Okay. You're getting a little annoying. Anyways, I mean, like, that's really, if people learn anything from watching me. Oh, I didn't mean to delete all of his messages. That's okay. I put him on timeout for a day. If people learn anything from watching, that's what we want them to learn, is that the market is statistically efficient, but not informationally efficient. That's the whole game, man. Like, that's the reason why retail traders have so much issue. I mean, like, of course, the market's always going to be hard. It's very difficult to find edge. So we should always expect at least the majority of retail traders to lose money, right? But like 95% of retail traders lose money. What can possibly explain that? Well, I think it's because they have an understanding of the market that is just objectively wrong. And if they had a true understanding of the market, they would actually stand a chance. And then you would have statistics that were more like 55% of retail traders fail instead of 95% of retail traders fail. Similar with funds. You're going to approach like a fund or a longer term strategy differently once you understand those things. And I think that it has societal consequences. Some people have this idea that if we just let the market do what it wants to do, that it will always come up with the correct answer and everything will always be fine. And we know that that is not the case, because the market is not informationally efficient. So there can be situations where the market is going to sell, and that's going to cause a lot of damage, and that can kind of become its own self-reinforcing cycle that will continue to cause it to go down. And in order to stop that, somebody has to come in and do something. There has to be some sort of intervention. And that's why markets are prone to market crashes just on their own. So other people have this idea that it's always because of government regulation that it happens. Well, no. It happens because it's always going to have something to do with the rules, but it doesn't matter how you set the rules up. There are always mathematical consequences from your rules, and that will always result in some form or another in some sort of market blow up. So it's always going to happen. So you kind of have to be able to come in and do something about it. But then on the other hand, it's extremely difficult for us to predict that it's going to happen. It's extremely difficult for us to predict what the consequences of the rules that we set up will be, because there's, the whole thing is it has some consequence that you don't expect, right? So that kind of means, well, we can't just always trust what the market's going to do. So, doesn't mean, so I think some people, like on the left, they have this idea that if we just get the rules right, then nothing bad will ever happen again. And that's not true either, right? Will always happen. It's kind of part of life that bad things are going to happen to you. I think with the way that things are, you will probably at some time in your life have an issue with employment in some form or another, where you don't like your job, or you get laid off from your job, or you have to move to a different. That's just the way that things are, right? And I would like it to be, you go and you get hired by one company, and then you just work for that one company the rest of your life. But the reality of nature is that bad things happen. Bad things happen. And there will always be economic downturns and risks and things like that. So you can't stop them, but you do have to be able to deal with them afterwards, right? But then you don't want to take the other side of that, which is just let the market do whatever it wants to do and it will always get the right answer. No, that's incorrect. There are situations where we know that we need to invest in a certain thing, and there can be problems with the way that the market is structured and the way that the economy is structured at that time that makes it impossible for them to be able to invest in that technology, even if like the entire fate of humanity depends on it, right? So we have to be smart enough to come in and say, I should invest in this thing because I believe in it, and not just because I think that that's what the market wants. Right? Hopefully you should be able to have both, right? You should be able to both invest in something that you believe in and that will go up, because you do have to make money, right? But there are going to be some situations where I think that you should invest in it, even though you're not confident that the market's ever going to pick up the cause with you. And there's other situations where you know that it's going to go up, but you shouldn't buy it. That's how I feel about Bitcoin. I think that, well, I don't know about right now. Bitcoin looks pretty ugly right now. But, like when this whole ETF thing was going on and all of that, I said, yeah, Bitcoin's probably going to go up. But I'm not going to buy it because I think that Bitcoin is ultimately useless to society. It's harmful to society, really. So I'm not going to be involved in that. I'm going to pass that particular opportunity up. Why? Because markets are not informationally efficient. Number go up does not mean investment is good. Well, we were supposed to get something from Williams, but my news squawk has not put out any headlines, at least from Williams. Now, at the bottom of the hour, is it? Yes, at the bottom of the hour, Jefferson will be speaking. Okay, I'm getting a headline from News Squawk now that the cloud providers are at risk of having legislation targeted towards them in the latest EU digital law. Let's see here. I want to come in here. I want to know when is where. Well, let's see here. Where's my earnings calendar? What day is NVIDIA? Oh, just ask the LLMs. Wednesday after market. Okay. Oh, hey, Forex Factory works now. Okay, we get Waller later today. We got Trump speaking later today. Let's change this to this week. Okay, so tomorrow is still pretty quiet too. Wednesday. Well, not only will we have NVIDIA earnings Wednesday, but we will have the FOMC meeting minutes. So the meeting minutes on Wednesday are going to be really important because that's when we're going to get, you know, an idea of how much argument actually is there on the board about December. Thursday. Oh, okay. So Thursday, they're going to do non-farms. And then Friday, we get flash PMIs and the U of M. It's University of Michigan, right? Yes, University of Michigan. Okay, but that means that today could be relatively quiet. Except for that if the S&P 500 decides to start selling again. You know, it could be interesting. Oh, okay, never mind. Here's the open. Okay, so we are getting the comments from Jefferson. So far, not anything in his comments that really sounds like a big change in his view. It sounds like that he thinks it's restrictive and that he would like interest rates to come down, but that he thinks that we should proceed slowly. And so that might suggest that for him, that he would maybe pass on a December cut, but maybe would want one sometime in first quarter of next year, for instance. Also, the market on open imbalance in the S&P, well, in the index futures, were all pretty negative. But that did not, at least in the first minute, push them below the key level 67.25. I'm going to bet you that when they touch that there's going to be a little bit of a flush. But then after that, they might play around with the level a little bit. So I guess I'm keeping an eye here on the SPOOs. Well, they're shying away from it right now. So 7:30, we like to take a quick gaze over all our markets. Japanese yen is pretty steadily trending down. We are seeing a little bit of a sell in oil after they hit, well, as high as 60.4, 60.40. But oil is selling. S&P 500 was on a pretty strong downtrend, but just before the key level, people started buying and saved it. So we'll see here. I think that you're probably going to get, like, okay, that was that move. They might flip back down around again and test it again, and we'll see. And then if they save it twice, then I think you're probably safe to buy it, right? Well, I don't know how good of a trade that actually is. Nah, I think that that's probably good enough for you to trade on it, though. I mean, gosh, if you had bought it at the level 67.26, that wasn't too bad of a trade, right? That's cool. Or hey, we use TradingView Advanced Charting Library for visuals, but their backtesting is limited. Shallow data, low granularity, no microstructure or real slippage. Our system fixes that with high precision futures data and a realistic backtesting engine. So they're not actually using TradingView at all for the actual backtesting. They're just using TradingView to show you the chart. That's interesting. Yeah, Seth, I saw you created an indicator for monitoring option volatility. Have you heard of the MOVE index? Just curious what you think of that. Yes, GDH, that's a good question. So I have multiple volatility projected ranges like that. I have this one, which is based on the at the money options that we are scraping from a website. There's another one that is based on average true range. And then I have another one that is based on an index. So that one, the default that it gives you is the VIX. And you would have to be paying for data that gives you those indexes. So unfortunately, most futures trading platforms do not give you the volatility indexes so that you would be able to do that kind of a calculation live, right? But you are correct. The MOVE index would be the one to use. And that is like an annualized number. So you can use that to get a percent and then turn it into a daily volatility percent and create the projected range from that. And the result that you should get should be pretty similar. But what we have found is that the near-term options, it gives levels that the market, at least the Treasury market, is extremely reactive to. So, and it's in a place that we actually have access to it, so that's why we've been going with that one. You can see I have them up on my chart right now. So if the treasuries continue to sell off, the downside would be 14.5. But yeah, we've that's especially when things are relatively tight. We found that to be extremely effective. Extremely effective. And I guess part of the trick is kind of knowing when that matters and when it doesn't, right? That's always the issue with the line, right? Like what I was saying here, I think it's still possible that they play with it. But when you have a level like 67.25 that is kind of like, well, if we cross that line, everything goes short. Well, everybody that thinks that the longer term is higher all kind of have a reason to buy there, right? And there's other people that are going to be like, well, if it crosses 67.25, I'm going to go short. And then there's other people that are going to say, well, if it crosses 67.25, these guys are going to go short. But then if I buy it off of them and push it back up, I maybe can easily stop them at it. So like those levels I have found tend to get toyed with a lot. That's why if we come back down there, the way that I would see it playing out is like a trade at 67.25 would probably trigger a cascade of stop orders. But then after that, they would probably toy with the level several times. The CTA triggers typically don't happen unless the market closes below that level. Okay? So there are some maybe technical things that can help your trading, but it's more important that you know what the market is doing, that you have all of the information to kind of know when they matter, right? Well, we know that there's not a whole lot of data until Wednesday, and we got a lot of Fed speakers today, and that might kind of limit the major moves today. Now, with that in mind, I think the S&P 500 is looking pretty bullish at the moment, isn't it? I wonder if we come back over here on ES. Okay. Well, so they're not quite to like yesterday's close, Friday's close. They're approaching that level. And then there's overnight highs. So there's probably still plenty of room for the S&P 500 to run there. Still entirely possible that it kind of sputters out and turns back down too. But I don't think that we really have anything today. I don't think that we really have anything today that would suggest a strong imbalance. I guess the one thing that we do kind of know is that sentiment is deteriorated because of Friday's action. Definitely. So I think that we could have an update today, but I'm really reluctant to like jump on board that for the long term. Okay, so the SPOOs did kind of turn there. The top of the hour, you can remind me I need to check on the family. So we take a quick break at the top of the hour and then see where we're at from there. But we'll probably stream until 9. And then I probably want to yeah, so the thing that kind of started us earlier was, you know, I want to make a video that's basically like, here's the secret to day trading. On a day trading basis, it's more the information, like the news that comes out and things like that matter the most. And technical things are really, really unreliable on day trading basis. Because momentum is a thing, but that's not a day trading strategy. But I also want to make a video, and maybe I'll make this video first, that is about order flow. Because order flow is getting really popular, and there's a lot of good things about order flow, and we have the best order flow video series on YouTube, bar none. But some of the things that I'm seeing people promote is kind of just trash. And so I'm really worried that people will, you know, see order flow as that and not learn the things that are really actually useful. So I want to make a video to try and you know, make a splash on that. So I'm thinking on that one that the video title I should make is the problem with order flow. After explaining why order flow is not useless, explaining that there are problems with order flow, particularly with the setups that retail trading educators are teaching. Have you considered reactions to / from your inventory cost basis indicator for scalping micros? So I have found that while the market will react very strongly to those levels, that they are not good for a bounce. So come back over here. You know, so you can see where they kind of bounce off of it. But then, like, after that, was the trade really like a go short there? I don't know, 1, 2, 3, 4, 5. I guess it was an okay trade. No, what I find instead is that you use it for a take profit. Like this one right here is so perfect, right? We started selling. Maybe you started selling it somewhere in this bar, right? Well, where do you hold it to? Hold it until you get to the inventory cost basis, or you start to get a good volume cluster. So there was a little bit of a cluster here. But then down here, you definitely got it, right? So you'd get out down here. Basically, the chances of the trend continuing through past both of these lines is much lower. And so it becomes really, really effective as a profit-taking zone. But I have taken it because it's backtestable and everything now. I've taken it and I've tried taking trades based off of like when it crosses those lines and trying to find all sorts of different scenarios in which it just, you know, I just need to find the right filter or something like that. And was unable to find an edge in that, in some sort of crossover or bounce sort of strategy based on those lines. But as profit taking, it seems to work. Now, I think one of the issues there is that probably machine learning and that sort of a thing is necessary to really incorporate that. And we've had issues incorporating machine learning frameworks into C# into NinjaTrader because of the versions of C# it uses and the issues that you get with all of that stuff, all of the libraries. So that's kind of part of the motivation behind why I kind of want to make my own platform, so that I could stick that and my market order imbalance, which, by the way, I have here on this chart and should just be changed to a 30. Now we're certain that we would rather have it be 30. Anyways, so we'll see if we ever get the platform, but I'd like to include, you know, all of those different indicators and some of my filters for the market depth stuff, and then see if that is effective at, you know, if it's machine learning is able to find a system with that. Like running XG boost or something like that. But that's way far in the future, I think. Aww. Uzi messaged me saying, "Oh yeah, I'm not here today because the dog died. He finally died." Well, so with a dog like that, man, you're gonna be down for a while. But it was a big burden on him, so you know, and just kind of noticed it because it just got some clicks there. It's been okay on the clicky clicks for a Monday. We have thick markets now. For the longest time, especially after COVID, it was just like, where's all the liquidity? Like, there's real problem. There is some, especially in the treasury market, there's some solid liquidity now. I'm so sorry. Thanks, bro. I was showing him some stuff over the weekend, and really, maybe we'll have some time to work on that today. I was looking at, or I was talking to ChatGPT rather. By the way, when I refreshed this, did this? Oh, it did the thing. That's so funny. Anyways, ChatGPT was telling me some ways to kind of deal with the non-stationarity of markets in regards to like using a projected range. Like if you have projected range that says that the volatility is let's just say 5%. Let's say that the volatility is 5%. But then you get a breaking news headline that breaks that. Okay. What do you do after that point? Is the looking at the volatility just kind of nonsense? Well, no, that doesn't necessarily make sense. I think what would make more sense is that the market would move to that kind of new center area, and then volatility would return back to normal, right? So what you need is a set of lines that kind of adjust. And apparently, like, that is a thing, and there's quantitative frameworks out there. And ChatGPT was explaining it to me, and I was making some progress on it. So I'm kind of excited about that. That could really help us, especially in a situation like right now where they move so much in the overnight. Okay, so so it probably did the thing where it wrote it twice again, didn't it? Yeah. So that's interesting. So if I do F5, yeah, all the levels are back. If I do F5 again, huh. There's some edge case scenario that I can't seem to find where sometimes it will write the volatility twice, and I don't know where it's at. I was wondering where those... Yeah, well, when I hit refresh there. So the other thing is this market order imbalance. This past history is based on the 10 minutes. So what you're getting right now is not correct. Actually, I should probably just delete that cached file. It's this one right here, I think. I don't think that was it. I think it's still wrong. Like, do you think it's that one? Oh, wait, what? No. I'm just...
Block by.
I feel like I'm taking crazy pills here. It should change. Remove. That's what it should look like. This A86. You know, I could put one on this one that just doesn't cache. That's probably what I should do. Market order imbalance. And just do that. Make sure that it's a 30. I think you need save tick replay on still though. So that's kind of interesting. Might want to look at that a little bit more later. Because it still doesn't match this one. No, that looks more correct. Anyways, if earlier you were, Apol, you were saying wondering where those levels were, it probably was because they were just like too hard to see. I would like to make something that will always resize it so that you can see the next one, you know? Okay, see now, why did that get written? I think that should be okay. So like the reason, oh, well, maybe I'm not, maybe I'm just, oh. See that right there seems wrong. It's definitely wrong. And these would have both have been going off of tick replays, so I don't know why this one is different. That'll be difficult to debug. Is there possibly any other difference between them? Is it maybe not that's weird. Okay, here, I'm gonna do this. One thing I need to make is that I should be able to, with the cached data, still allow you to change the period. That might help. It's definitely different. I think this one is correct, though. Man, that's really... Well, let's take a break for a second. Yeah, so anyways, the one issue with my cached indicators is that if you decide to change a property, then like the past cached datas might be completely invalid. So it has something to do with that. I would bet that I leave that like that tomorrow they'll match each other. But for some reason, because of the way that we changed this one, it's incorrect. There's just like a few orders there that like it is now reading is different for some reason. Almost as though this one is still working off of a 10-minute or something. Actually, that's worth. I don't know how I would fix it. I think that to really test it, I would need to like close the workspace. Could it be that the old version? Oh, you know what? Let's this really. Things F started like a. Oh come on, what was it? A86. A86. Okay, it does have it. What? Okay. This very first line in the cached file, that is so wrong. So this is that change that I made recently. So does that mean that this one is actually more correct? The cache data one is wrong? Well, does it ever do that again? No. There's definitely some issues. This is maybe carried over. Because it's giving me an insanely large number. Am I not taking it back out? See, like, here's 2. So that number is there, and then it's changing every time. It must be, is it a precision issue? Did I overlook a precision issue? It's a double, why would it? I just deleted today's starters. Aha. Oh, it won't get written until the end of the next minute. That's why. That's still wrong. So look, it's going. It's all good. Recorded live. Current unknown. Running unknown. What? Oh, geez. No. I just can't see. No, it's fine. It's 8. I wonder. I think I know what's going on. Maybe I don't know what's going on. Okay. Yeah, that's the issue. I did find a bug. Oh, that's so funny, the way that that is working too. Okay. How should I fix this bug? Basically what's happening is there are some columns that I've decided don't write out, and have a little way to say like which ones to not write, but it's not writing them out. But then the arrays is incorrect when you import. So that's okay if the excluded values are always at the end. So I'm thinking, should I change it so that they're at the end? That would kind of screw up some of the cache data, but some of the cache data is broken anyways, so... Where do I change the excluded columns? Oh, right there. Looks like he missed all the fun with tangent. I mean, it was okay. I bet you that if Uzi was here, he would have said, "Oh, it's that one guy." But I wasn't ready to deal with it, or was think about any of that stuff. So I just put him in timeout because he was getting annoying. But it's kind of funny when I'm thinking about this bug that I've got. I've basically like engineered my own buffer overflow of sorts. Because basically, like, that's how you're getting this number that's like, how is that like this huge double with a forever, right? It's because it's loading the next value in incorrectly. So like what's happening is I've got an array like this, right? And I'm trying to put it into an array like this, where this one has an element taken out of it, right? So what happens is when I export, I take this array, I take this element out, and then I write it to there. So then when I'm writing it back, when you get to this one, right, it puts this into here instead of into here. So to fix that, or the reason it wasn't an issue ever before, is because this was the only indicator that did it, and it was at the end. But now that it's in the middle, I would have to have something to say, okay, so I do have something to say, this is the excluded column, take it out. But I would have to go at each one and I'd say, okay, so I just say I to I, I to I, I to I. But if it is excluded, then I have to do an offset. I have to say, I'm taking my values of I into my entry of I. It actually needs to meet my values of I plus 1. Right? Like the double. No, it's not like the double. The picture sure looks like it though, doesn't it? That's funny. Like, I'm worried that I will just make the logic here for this more complicated. The easier thing to do is to just make sure that this is always over here. So that's what I'm going to do. Where should I make a note here about it though? I know. This is kind of a big pain in the butt because the reason I changed this, okay, so the reason I changed the indicator is every once in a while you can get a situation where volume occurs between the bid and the ask. You know, like the best bid is 18.5 and the best ask is 19.5, and the trade happened at 19. And I have a more advanced algorithm to match that volume up with a level 2 change to figure out whether it was actually the bid or the offer. Or if you have MBO data, you can figure out which one it was, right? But for the futures, it's like this never happened, so I was just ignoring it. But then I had a situation where what the indicator was showing me did not look correct to me. It turned out that there was a bug that I had that I fixed. But in trying to track down that bug, I said, well, I should track down the unknown percent. So it turned out that the unknown percent is trivial, and it wasn't that. But now I added it in there and I'm tracking it, and so I've got to fix it. Ha. No, that's not right. Oh. Dang. That's sucks. Okay. Because of the change that I made, I have to remove it from the chart. I should probably change the default for that to 30. Okay, now that's correct. And let's see here. The name of this new one should be, because it won't have to do it at the beginning of it. Oops. No, that's not what I did. Paychecks. Now it's correct. Loaded from cache, recorded live, unknown percent, current. Blah, 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 blah. Okay. And then here you can see, here's a case where, sorry, which shows a yellow. Current unknown and unknown. The current unknown is the yellow one. Okay. Current unknown goes to 63. This should also be 63. Oh, do I not have? No, I do. Also, why isn't it getting them? Balance current buys, sells, running buys, running sells, current unknown. Running unknown does not show. Oh, because it's being skipped at 6. And this should actually be 9. Silly me. There we go. Yes. Yes. And then that should be on there for 30 minutes and then it goes away. Yes. .5%. Pretty insignificant. And was there only one? Well, when we get into the live data, it might be more likely to happen. Okay, so what I'm going to do is this one right here. Yeah. Okay, good. Okay. When I discover a bug like that on stream, you know, I feel like it's a little embarrassing. But like it shouldn't be embarrassing. Like that was a really interesting edge case. It is absolutely the sort of thing that you would overlook and miss and so forth. Now, if I had the resources and everything, I would put that down in a regression test and I would always test that from here on out, right? But ultimately, we solved the problem. It's interesting, though, that it was getting up to a 70% imbalance at one point. At, when was this? 4 o'clock in the morning? Where was this? 71. Yeah. Oh, interesting. That stuff all looks correct. It's just there was a lot of buying through there. So that's interesting. So it was kind of telling you in a way that you might not have seen with the cumulative delta that they had been buying it through that area. Would you see it through the cumulative delta? 4 o'clock. Oh, yeah, you do. But not as well. It's interesting. It's a very, very, very interesting. There's basically like in the cumulative delta, this blip is so tiny. But because basically nothing was happening in this area. Oh, that's good. But that's really good. Because basically it's alerting you to an imbalance that you wouldn't see through cumulative delta because the pace of volume in that area is less. So that actually makes it the indicator more useful than I realized. That's pretty cool. Dude, I'm glad that we had the bug now and that I looked at because I never would have realized that, and I think we just learned something really significant. That you can have an area of like where the pace of volume is less. Probably if we look at the volume profile on the extended session in that area, it's probably like the point of control. But the pace of volume there is less. And so when you're looking at cumulative delta, you don't really see much of a change in cumulative delta. But when you look at the market order imbalance, you can see it. So they're hiding. They're hiding and we can see them. That's pretty cool, dude. Okay, so that's fixed. And commit and update that later. This is exactly like when I was saying, like, one of the issues with data engineering is that getting to a point where your data is clean enough to really do effective analysis is really hard. And that's what we're dealing with right now. Why not trade gold? Well, because I just don't really have enough predictors of order flow to really be able to predict the order flow in gold. I think there are some situations where we can, but I don't think that there's enough opportunities like that in gold to justify me specializing in it. And I'm not going to scalp a futures instrument like that unless I'm an expert in it. Meta says the 2,400 adult movies they torrented were for personal use and not training AI. Or maybe it was an employee did use it to train AI, but they weren't supposed to. Society is so cooked if they start training artificial intelligence on pornography, man. Like then the birth rate is really gonna plummet, right? Like it's already hard enough for real people to compete with Photoshop. But now you're not even photoshopping people, you're just making like, man, who knows? There could be all sorts of weird stuff that they might make that might not make any sense to your mind, but is still attractive to you or something like that. Like, I don't know, AI can do weird stuff. It's like the rabbits, right? There's some rabbits that they are just so enamored by the fake rabbit that they don't reproduce. And then the birth rate plummets and the rabbit population dies out. That's how they do it. We are so cooked. But so far, I don't think OpenAI is going to do that. So maybe we're okay. Maybe we're okay. And Facebook says, I don't know if I trust Facebook, but they say that it was for person use. Okay, what do you got here? Live action. I have a friend who is making money practically every day on the NQ, making 5 to 30 a day. Wow. How is she doing that? Well, but how long has she been doing it for? Because okay, so like I saw this guy on Reddit yesterday, was it? And he was like, he had been doing other stuff for it. It was a little bit suspicious. It was like, I've been trading this way for forever, and then I switched over to order flow, and now I'm having tons of success. And like, what should I do? And yada, yada, yada. And I'm like, he's only been doing it for 2 weeks. He's only been doing order flow for 2 weeks, and you're so crazy. So crazy. Like, especially, and equity indexes, rather. Yeah, don't be afraid to pass that information, APOLs. What? Yeah, I mean, I am interested to know what they are doing, but what? She said she doesn't know what a ladder is. She places trades off of an order ticket. Okay. Oh, right. She's not using order flow to do it. I don't know where I picked up that she was. So then, but did she tell you how she takes the trades? Anyways, equity indexes are streaky. Order flow signals are streaky. So it's extremely common, I have found, to find people that are making money trading equity indexes and like seriously like have a year or two of success with it. And then just completely blow up, right? Especially, man, if they're making like 5 to 30K a day. I bet they're over leveraged. I bet they're over leveraged. Wait. I asked her what tool she uses, and she said the percent indicator, lol. She's queuing off the index bull bear percent. No way. No. like on an intraday basis? That's so crazy. That's so crazy. But you know what? Like we backtested that one, and that was kind of what the performance was like. Is like, it seemed like it worked most of the time, but it had fat tails, and so in the end it wasn't profitable for us. But I suppose with with, you might build an intuition for it, you build the intuition, and so you miss the ones that are the fat tails that screw you over. I don't remember too many details about that, but I don't think that we were doing it off of the bull bear percentage as much as we were the tick, right? We were applying a moving average to the tick, but this similar thing. So the results would be similar. At the same time, At the same time, that is not something that I would expect to be very profitable right now, right? Because the returns on the index are being driven by a small minority of the top performing stocks. Yeah, that's exactly. She's asking me to give her lessons. I told her I don't want to mess her up. She's recognizing something subconsciously. Well, you know what I would tell her to do is I would tell her, don't keep just sizing up, right? Like, or rather, how do I put this? You don't want to shake their confidence, but you should say, okay, you found something. You need to realize that things like that don't necessarily last forever, and that you should be saving some of what you made. So like, you don't take the whole account. Like if you're making 30K, like you're trading a lot of contracts, you maybe don't keep sizing up, like there's or you take money out of the account to avoid dealing with like the broker going under or something like that. That way, because what happens to people, I tell you, what happens to people is they chance upon something where for a period it does work really, really well. And maybe it's just luck, and maybe they actually found something. But either way, what we find from all of our backtesting and everything is that things like that definitely exist. It's just that they don't last like over a 5-year time period. So if you find one, you want to take advantage of it as much as possible. But when it stops working, like the whole key is when it stops working, you stop as soon as you can, right? Because what pretty much everybody does is they're told, well, there's drawdowns in it, and I need to, you just keep trading it. And then by the time they realize that something has changed, they've already blown it all, right? Like that's what, not to bash on them. I think if there's anybody like an educator in the space that has experience and like is worth talking to based on their experience like that, it's Anthony Crudelli. But that's exactly what happened to him, right? Was he basically became the biggest guy scalping on the electronic trading way back early on. And then when they realized that he was doing that, other people came in and he lost the competition. But he lost so much of it before he realized what was going on. Oh boy. She came into some market from major malpractice suit. She gave $50K to her son who blew it in no time in the market. Don't tell me stories like that. Dude. When I'm on, is it, I forget what, I need to go and find it and see if he's posted it yet, because he never came back to me with anything. I kind of thought he would post me a link, but I did an interview with one guy, and he asked like, what was your worst loss? And it was my worst loss was one where like overnight, like I forgot about a stop that was still placed and stopped into a trade, and then it went like a whole handle against the trade and then came back. But the one that I really should have talked about was the one where I lost 10 handles slippage on ES in just the most bizarre action. Just the most random thing, and I was the only one that got hit by it practically. It's like, I don't know, was I targeted, or is it just like the most incredible? If that's bad luck, I really think I might have gotten outside of like a major news event and whatnot, I think I've caught the most slippage of anybody ever. So how is it, seriously, 10 handles? How do you get 10 handles? Right? Okay. But the biggest losses that I've taken have only been like 500, maybe in a day 1500. Like when we did oil, I think there was a day on oil where we lost, where we made 1,000 and lost 2,000, I think it was. And then I turned around and I bought the options and tried to play it longer and made it all back. So it was like I transferred money out of this account and put it into my Mad Money account. But I digress. You know, I've never taken huge losses. I've always been like a very clear understanding of the limitations of what we have and to not push it too much, you know? And meanwhile, I see all these people on Reddit that will put like hundreds of thousands of dollars that they have into it and just blow all of it. And it upsets me. It does. It makes me sad to see that. When it's like there are people that are really good at this and they keep it small and they don't really have the capital to risk it like that. And then you get these people that have absolutely no clue what they're doing and they just risk tons and blow it all. When they could have had pretty good, they could have had things pretty good if they just put it into an index fund, you know? Like $100,000 in an index fund? Man. Okay, so first of all, you're going to make like $5,000 to $10,000 a year just on that, and it compounds. But then on top of that, that's so much that you can borrow against it. So now, you know, you can like buy a new car. You'll still pay a car payment and everything, but you'll be paying back on and the rate that you get on it is low. So it's practically like interest-free loans. You know, all these things that the super rich do where, right? They don't, everything, they don't buy anything with their money. They buy it all with debt and then they're not taxed on it. Right? And you could be doing that. My friend nearly blew his gift in the bathroom. That sounds like something that'll happen to me someday. I don't put that protective stop in and I step away. You know. Well, anyways, I think that our call, at least on the treasuries today, was pretty good, right? Well, we were expecting Fed speakers, so the market was going to be tight. And then we got the Fed speakers and they didn't really say anything, so things just stayed really tight. And this has been a pretty uneventful session for the treasuries. In the S&P 500, on the other hand, they tested that those 67.26 and bounced. And we got a pretty big bounce, but then they've retraced almost all of it. So we're basically back to where we started. The closing auction is going to be the important thing, though, right? Like if there maybe some sellers come out and intentionally try and close it below 76.26, 25, whatever. Like, so we should keep an eye on that. And especially if like it doesn't come up. Another thing is, I think this would be a good day to watch the 1 o'clock. So like an hour before the market closes is where they will send out like margin notices and things like that. And people have to close positions because they weren't working. And, you know, if there was people buying the dip like that there and it didn't work out, that's when you often see the selling come out and they're forced to deal with it, right? I use Rhythmic, but my bid-ask numbers are different than yours. By how much? I mean, if it's the bid ask itself that is that different, then that's going to be unusual. I mean, there's filtering, so they are going to look a little bit different, and there's a delay and everything. But, you know, like we have 8168 at 16. You have a radically different number from me there, then there's a problem. Sometimes by a lot. And then the next thing would be make sure that we're actually on the same contract. You're both on ZN Z25. The market orders bit, that can be different. Right? And for that, I'm using the default of 1500, I think. Z25, yes. And you are talking about the limit orders, not the clear trades, like the inside ones. Like the clear trades interval, mine is just the default of 2500. 2.5 seconds. You have more on the offer. Okay, so like how much do you have at 21.5? Oh, the inside's different. The inside's different. The inside's different. I have my settings set to the default of 2500 because the clear trades interval is going to determine what that looks like. Right? And I would also, another thing I would say is that like these numbers right here, just ignore those. Just ignore those. These ones up here and these ones down here, just ignore those. They don't matter. They only matter in that there's a number there that traded since that time, and that's the only reason that I leave them. Otherwise, like once it's passed, I completely ignore these. Sometimes it's helpful to see like, okay, like right here, there was an iceberg there last time we were there. Well, when we come back to that number is going to reset, right? So if I really want to remember that there was an iceberg there, I put it in this column over here. Yeah. But the inside numbers can, and even if we had the same settings, you might see slight differences in them. Because the issue is that, you know, the market data feed and the limit order feed are separate feeds, and they aren't going to be in sync completely between you and me. So there's always going to be slight differences between them. Not enough to matter for us, but there's always going to be slight differences. And that's again where you really, like if you're an algorithm and it really matters, then you get market by order data. If we're doing market by order data and our settings were the same, then the numbers that we would get should be exactly the same. Okay, well, I think I should get going. I think I hear the boy, so maybe not gotten to school, putting up a fight, so we'll help him. And I'm going to try and write scripts for these videos and probably do a little bit of cleanup on the, you know, I thought, well, I've run into a problem. I should fix that problem, but we fixed it on here during stream, so I guess I can do some work on the rest side. All right, guys, I will see you tomorrow. Stay excellent, team.